All right, everybody, let's kick off this nat gas webinar. I am amazed, not amazed, impressive the popularity of this thing. Joined with me is Jack Wexel, our Senior Director of Nat Gas. Jack, quite a bit of interest in this one.
Yes, over 500 registrants, which is a terrific audience for us, and we think we've got a really good show for you today.
Oh yeah. Well, let's kick it off, huh? Couple things. There we are. Contact us. You can reach us there. Jack, you look good in that picture.
Yeah.
What we do, for those of you who don't know, the one thing we do is we take a lot of disparate data sets and we combine them to actionable insights and analytics. So what our clients get is we take all these things and then they get analytics, they get the data behind it. We don't hide any of the data, and we follow the molecule from wellhead to downstream, and then downstream back up to upstream, capture the molecule and the value of that molecule all the way. Moving on, this product or this presentation is going to cover on natural gas products. So with any product that you buy, this one is the Southeast Gulf Bundle, which gets you, Jack, it's Permian, Houston Ship Channel, and Haynesville, right?
Correct. Yep.
And prices and all our forecasted prices and all those. So you get our production reports, you get all the FERC products, the data, you get supply demand products, which are basically PDFs with our outlook, our pricing forecast, and the data behind that. You get G&P products, and then you get the shipper and gas pipeline products, all delivered through our energy data studio. So agenda today, Jack, let's kick it off. From oversupply to undersupply, all eyes are on the production response.
Yes. So quite a change in tone for the market that we saw kind of end of January, early February, where prior to that we had a lot of gas, too much gas, in fact, and now we're short gas. So we'll talk about that transition and how producers are going to respond to that.
Amazing how quick it can happen. All right, power demand. Data centers are, I don't want to say hot, but data centers are growing quite a bit. And let's not forget, because I think sometimes we do forget, Jack, and you mentioned this, LNG is still the biggest part of this driver.
Yes. Yeah, LNG is the big dog. We'll talk about gains, kind of the developments that we've seen since the new administration has come into town, and kind of what that means in terms of a build schedule and ultimately gas demand.
Sweet. All right, section 3, getting to the Gulf. I mean, we follow infrastructure, we follow the constraints. Everything is headed towards those exports right now, specifically, especially in the Haynesville.
Yes.
And then storage and price. We are holding out on the price for all of you who think about dropping off early. We're going to make you stay around to give you our Henry Hub forecast price. So that'll be at the end. So Jack, ready to kick this thing off?
Let's do it.
Hey, I do want to bring up though, Jack, we put out a data insight or the daily note this week on the shippers on Matterhorn. So one, that has gotten just press. All of our clients are looking for it. Even some non-clients are looking for that information. So for all of you, go find it on our website. If you go to the daily note, our blog, you can find it. Clients, the shippers behind Matterhorn are only for you. So if you want to know about them, give us a call.
Yeah, it's a testament to the kind of the power of data and our ability to mine it. So Matterhorn shippers were buried in a form called 549D that FERC updates sporadically. And we were able to pull that out along with about 35 other pipelines. So we've got a pretty consequential database, which helps people assess, action on that new pipeline. So it's pretty fun, pretty exciting stuff.
All right, well, let's start with oversupply to undersupply. Let's look at our production, Jack.
Yep. So broad themes here, where we're seeing growth in 2025 are not these basins.
And hold on, this is average to average, right?
Yes.
Okay.
The exception of some marginal Rockies growth, which we think can be pretty much absorbed by West Coast markets.
And is it enough to satisfy the West Coast markets?
Yes.
Okay.
Yes, for 2025, for sure. Some developments there, as we kind of go through 2025 there. both on the production side and on the demand side, which we'll talk about perhaps maybe in like a Q4 webinar or something. Now, where are we seeing the growth? So primarily Permian. Again, we mentioned the Matterhorn piece. With the shippers there, you're looking at hopefully another 0.5, 0.75 BCF a day of production growing into that Matterhorn pipeline. But overall, 2.1 BCF a day growth in 2025. Haynesville comes in second, but is certainly a little bit more consequential in terms of this webinar. 1.2 BCF a day of growth average on average. And the Northeast really still remains constrained from a infrastructure perspective, waiting on two Transco projects there in MVP Southgate and the Southeast Supply Enhancement Project to get things going on in a little bit more of a longer time frame. So kind of flipping to demand there, you can kind of see how this balances out, right? LNG exports we anticipate will grow by 2.8 BCF a day on average this year. That includes the kind of the introduction of Plaquemines phase 1, and of course Corpus Christi stage 3, both bringing trains online, kind of in a sequential order over the course of the year.
I'm curious. I look at Florida, Georgia down there, plus 0.3. We only got 0.1 growing out of the Northeast. Is there opportunity if you dig a little deeper in that area?
For sure. We'll feature kind of Station 85 and FGT Zone 3 pricing action a little later in this deck. But between data centers, between just normal load growth towards kind of call it migration to the Southeast, those utilities in Georgia and Florida are seeing just rapid growth in demand. Many of them are recontracting next year and in 2027, and so there's going to be some changing market conditions there, especially as Plaquemines phase 2 ramps up as well.
So now, Jack, I've seen this presentation, so I know what's next, but there are some constraints. We can't get all the production to the demand centers, right? Where are we seeing
Correct.
those?
Yes. So currently there is a constraint in the Permian, right? Still waiting on some compression on Matterhorn there to really take full advantage of that pipeline. There is currently a constraint between Houston Ship Channel and Gillis in Louisiana. That will be relieved later this year, presumably when Blackfin starts rolling, and then a little bit more relief kind of down the line when a pipeline called Trident goes in line in 2027. And then lastly, of course, is the Northeast to Southeast constraint there, mostly around Transco southbound flows, but that will be relieved in 2 years' time as well. The timing is critical on these projects, but there are going to be some impacts to basis in the meantime before those constraints are removed.
So, Jack, let's move forward. This gets us average to average, but I think, and we'll show average to average here, and there's a bigger story though when we get to exit to exit.
Yeah, let's look at that. So follow the bouncing ball there. That production forecast for Haynesville is backloaded. If we look at December 25 versus December 24, we're anticipating about 2 BCF a day of growth. And achieving that with an increase roughly 10 wells, which is a little less than a third, and some duct completion and also some tills, we believe can also help to kind of fuel that growth, right?
And then the question I have though is Permian. If I just look at the Permian rig, so we have declining rigs. Is that just drilling gassier basins, GORs? What is that from?
Yeah, so both Delaware and Midland are getting a little bit more gassier. We're seeing the IP rates on newer completions basically going up. You're also extending laterals there in your at the drill bit. You're becoming more efficient, particularly after a lot of the acquisitions that we saw last year.
Yeah.
You're doing more with less in that basin.
All right, where are we headed next, Jack?
So one thing to note, and we'll talk about this too, is the infrastructure component to the Haynesville growth, right? Williams, Louisiana Energy Gateway Project and Momentum's NG3 pipeline completions are supposed to be done by the second half of 25. I know that's a vague window, But we are, obviously monitoring those projects. Williams gave some positive guidance last quarter around that project. We haven't heard as much from Momentum. Those projects do need to be completed to enable some of this production growth. They don't need to flow full, but they do need to flow something.
All right, Jack, I know you're a betting man.
Yes.
Which one do we need? If you were to bet on one, they both seem to be running on time, which is great. But if we needed one, which one would it be?
I would probably pick the Williams leg project. I think that just their continual updates have been very positive.
Yeah, and they're usually pretty good about building that infrastructure and giving updates. So good to see. All right, where are we headed next?
Let's look at this.
Oh, yeah. When is the ramp coming?
Right. So from a more holistic perspective, right, one of the kind of key markers that we're looking to is when will production really start to hit 106 kind of on a steady basis. We anticipate a July 25 average of 105.9, and that is really only what, 3 months away?
Oh my God, yeah, four. Wait,
April, May, June.
no,
So,
yes, next quarter, so we like 3 months.
yeah. Before we know it, summer will be over. But yeah, that 106 marker there is really kind of a key, achievement, right? And then the more significant ramp kind of occurs in Q4. So once we get kind of through September, we see another ramp in the October timeframe, and we think that prices so far this year have been supportive of that ramp.
And we really need that in the Haynesville.
Yes.
Right. Or if the Haynesville can't do it, and we'll talk about this a little bit, what are some of the tier 2 basins going to do to provide that?
Right. So, if you don't like $5 gas or $4.50 gas, then you'll be giving other basins an opportunity to grow into that space.
It'll be interesting to see with all the comments coming out of the Haynesville, what happens.
Switching over to demand, right? We don't have to spend a ton of time on this, but there's a theme here, and that is growing demand. So summer 25, we believe, will average 38.9 BCF a day, which would break the summer 2024 record by 0.2 BCF a day. We're confident in this forecast despite higher prices. Reason for that, obviously data center demand has a lot to do with it, but also there are 6 gigawatts of coal retirements that will basically decrease the base load coal that is available to essentially substitute natural gas. So coal to gas switching was a term I thought that might have died last summer. It's still back.
Still going.
But we are not as confident in the coal fleet's ability to really sub for gas because so much base load has been retired over the past 5 years.
Still good growth in power burn.
Yeah. Now, kind of going back to the drivers here, right? The two things I'll highlight from this, besides our data center demand monitor, which is
that's in our macro, right?
A huge
which
part
you
of
can buy online.
Yes, you can buy online. You can reach out to us for corporate-wide subscriptions.
Oh, nice plug there.
Yeah, it's a great tool. But nearly 12 gigawatts of incremental load expected in service in 2025, and then 22 gigawatts in 2026. That's why we have our peaks in July continuing to grow. We think that renewables are fine; they'll be able to partially handle some of this, but you need gas first of all as a backup, but primarily as a non-intermittent source of generation. The other thing that we're seeing a trend of is project developers kind of getting fed up with ISOs and dealing with utilities and opting for some off-grid solutions. So you've seen the announcements from Exxon, BP, Chevron, and others saying, hey, we will build you a small single cycle power plant and pass it on to your facility and provide all the gas for it. So as that calculus shifts, so will our forecast. But main point here is 6 BCF a day by 2030 is our base case assumption.
That's a lot. So this is, hold on, we got plus 23 BCF by 2030. So we just talked 6 BCF in gas-fired power burn.
Correct.
But the big story, and talk through that, but the big story we'll move to is it's still an LNG story.
Yeah. So yeah, you guys know kind of the story right there. about 4 BCF a day of that 6 BCF is on-grid solutions. 2 BCF a day will be off-grid. Like I say, we could see that shift in further updates, but the data center demand monitor is something that we're updating every single month, adding projects, booting projects off the list. There's like 340 of them now, I think, in this month's update. So it's a very detailed, kind of grounds up look at that demand component.
The one thing I want to point out here, Jack, though, is there, when we go off grid, gives us less visibility into what's going on as well, right?
Correct.
So you're really having to look at wellhead all the way through demand to do this. So to understand it. So I just want to point that out, guys, is Jack and I talk a lot about regional dynamics. So the placement of the data center, the placement of pipes, where it's coming out of the ground, where it's needed, it all goes into play into this analysis. So yeah, we can look at Henry Hub. We also have to look at basis on all the other pricing points.
Correct. And I think one of the things, the granularity of our data set and looking at things from a gathering and processing level will lend us help to kind of locate those off-grid systems and be able to estimate their consumption, because no one else can really see into G&P systems the way we do.
Yeah, appreciate that. All right, let's talk LNG.
Okay, so we've divided up the LNG world into FID projects. You can see the list here, and expected FID projects. 2 big developments with the Trump administration this past quarter, right? So CP2 received its non-FTA permit in March, and also kind of quietly got its FERC approvals for both the facility and CP Express, which is the header pipeline. And so, prior to that, we were looking at Blackfin, which is going to basically move gas from Matterhorn over to CP2, and we were like, whoa, why are they under construction? That's a little aggressive, right? Not they knew anything that we didn't know, but with the EIS for CP2 and CP Express, it seems like that whole contiguous system is really in place to feed the facility. So good news there. Commonwealth got their non-FTA permit in February and announced that they will FID by September of 25. So we're pretty positive on that one. However, in our LNG tracker, in the macro S&D, we also monitor sale purchase agreements, and CP2 and Commonwealth still need a combined 1.5 BCF a day in commitments, binding commitments, to reach an 80% capacity threshold that will lock in that FID. So something that we're going to look at, Chris, over the next 9 months or so, because you really need to get that FID done by end of calendar year so that you can complete kind of an anticipated 4.5-year construction schedule. And
we do anticipate this happening.
Mm-hmm.
Yeah, and why the 80%, Jack? Is that just what we've typically seen in the past?
Yep, that's when the FID announcements have typically been signaled for, for Costa Azul, Corpus Christi, Plaquemines, Phase 1. Those are the kind of things that we were monitoring.
All right, let's keep going.
Okay. We should add there that that 6 out of the data centers, 17 out of the LNG exports, for a total of nearly 30 BCF a day in export capacity by 2030.
Sweet.
So, and I think that aligns with the administration's goal. I won't make a tagline for them, but 30 by 30 sounds like kind of a neat
30 by there you
campaign
go. I like it. Yeah.
For the Department of Energy, right? You can hang it on the Forrestal building in DC. All right, so what are we looking at here? Will Haynesville answer the call? What we are specifically looking at here is the storage surplus or deficit to the 5-year average. We're sitting at a deficit of about 122 BCF as of mid-March, with an average cash price around $4.14. This basically signals whether the market is in balance or out of balance. One of the major balancers, of course, will be the Haynesville.
So that's quite a spread.
Yes, it is. So the light blue bars indicate our rig count forecast and what it's going to take to basically raise production to balance the market. All the way out to 2030. We don't usually show that kind of stuff out to 2030 in these free webinars, but because you're a special audience, we'll show it to you here. And then we also have the darker blue bars, which is if you don't really do anything to the rig count. If producers lay low and say, we're going to wait for better prices, and there are some producers that are saying that, that'll be the situation. So balanced trajectory as we kind of go waddle around deficit to surplus over the course of the summer, or unbalanced trajectory where you don't produce, you grow that deficit, you get higher up on the curve, and dogs and cats will be living together. Mass hysteria.
Well, let's talk though about this spread, because Aethon just said they'd like to see $5 gas prices. But then you have Citadel by Paloma, which is a bullish sign to me. And you get these first movers in there, hedge funds. We're probably not going to get to that level. So does the Haynesville keep production lower to get to a higher price? And if that happens, let's say they do keep it lower, what do you see happening? I would think the Anadarko would come into play.
Sure. Yeah. You can also add Tokyo Gas to that in their purchase of some Chevron acres just earlier this week. So I understand what Aethon is doing. They're striking a more conservative chord than maybe some other producers in the basin. Of that 10 rig increase, we anticipate about 5 to 6 that kind of have been publicly announced by Expand and others in producer guidance. And then another 4 or 5 to come from basically the privates or those publics that haven't committed yet. I think there's a little bit of what we dubbed rig chicken game going on with producers. Depending on some of their hedging activity in Q1, you may have some folks that need to, start, drilling and completing wells that will work into that Q4 25 timeframe that we mentioned. So that's a little bit of why our production forecast is backloaded like that. But the response and the depth of the response is going to be kind of a key component here. And you can kind of see the guardrails they're setting up from a price perspective.
Yeah, so in our production, that first slide we went through, we have Anadarko pretty much flat, but we could see a response there. We've seen a lot of money flow into the Anadarko.
Yeah, sorry, and if you don't do that, right? Prices go up to $5.50. That's a good break even in the Anadarko. It could even, and this has been a funny rumor because we haven't seen any activity there for years, but it could even spur on some Fayetteville shale production. Which would be a wild development.
Well, we love those tier 2 basins, although Fayetteville may be a tier 3. All right, what's next here, Jack?
All right, so we've got our Gulf Coast S&D super build. So this is, pulled right from the pages of, our Southeast Gulf S&D, our Houston Ship Channel S&D, where we monitor all these projects. This map can get a little crazy, so we'll just kind of leg into it one year at a time.
Can I lay this out? So basically, this is up through 24. We've been running this map for 3 years. It's very popular. Basically, this shows, hey, can we get the gas to where the demand is, which caused us to call out 2 years ago, gas prices really taking a hit, going below $2. And now basically we're seeing some other dynamics come into play. So what we're showing right now is up through 24. Let's look at Q1 25.
Okay, yeah, this is actually all of 25. There are some, I guess the blue pipelines there are really just to increase flexibility and the ability to move gas around. That East Lateral Gillis was pretty important to feed Gator Express and allow Plaquemines to expand. South Louisiana project, a little less consequential. LA Energy Pathway, of course, gets some gas into kind of the heart of Louisiana, allowing for a little bit more interconnect flexibility there. And then again, the two big dogs there, NG3 and LEG, we talked about previously. Combined 3.5 BCF a day capacity there. And as I mentioned earlier, they don't have to flow all the way to unleash that production, but they should flow some.
And what are we seeing coming up here?
Okay, so when we get through 2025, a very important event will be happening kind of at the end of 2025, at least according to the good folks at Whitewater, and that is the completion of Blackfin. Announced construction in Q4 24, announced completion, anticipated completion in Q4 25. It's not a particularly long pipe, but what it basically does is it connects Houston Ship Channel with the Texas border, allowing for some 3.5 BCF a day of gas to move into this, general Gulf Coast vicinity. Again, CP Express getting its environmental review is a very important development there. A little later on, in addition to the LNG projects that we think will kind of take hold here, first gas at Golden Pass in Q1, Plaquemines Phase 2 at the end of 26, and the Trident pipeline coming online Q1 2027, followed by Pelican in 2Q 27, which should be adequate to keep these facilities healthy and full of gas.
Well, timing is everything.
Yes.
A lot of working parts here.
Yep. A little later on, you get 3 more facilities coming online there, including, we might kick Commonwealth a little bit further down the street there. But Southeast Supply Enhancement is kind of the big deal here, unleashing about 1.5 BCF a day of Northeast gas. This will become increasingly important as we look at how Plaquemines is going to supply its Phase 2 ambitions here. And then just general market conditions at Transco Station 85. Kind of continuing on here, you got 2 projects there, Boardwalks, Kosher Junction, and Kinder Morgan's Mississippi Crossing, which have been FID'd. Energy Transfer Southern Mississippi project has not, but there's potential for 5.5 BCF of incremental gas to move across Mississippi as we get into that 2029 longer time frame.
A lot of this is population growth over there. You also have data centers. A lot of data centers come up in Georgia. So you got the Northeast. I don't know if anybody's flown over the Northeast up there, Virginia, Pennsylvania. It is data center central. And now you're going to unleash the Northeast to get down to LNG with the Southeast Supply Enhancement. So a lot of interesting things going on in the Southeast right now.
Yeah, and these will have kind of knock-on effects as we look beyond 2026.
Yep.
Right. So one of the things that we feature in our Southeast Gulf Supply and Demand is the emerging knife fight at Station 85. Plaquemines Phase 1, no problem getting gas, right? But supply at Station 85 is very tight. Plaquemines runs out of uncommitted gas supply in 2026. Coincidentally, Southeast Supply Enhancement is not coming in until late 2027. Coincidentally, there also happen to be a lot of Georgia and Florida utilities that have to recontract in that 26 and 27 window.
And so, those utilities just paid a premium for some of these enhancements.
They're paying, premium for transport. They're paying, quite frankly, a premium for storage. Premiums all over the place. Pretty healthy margins for most midstream companies, especially those that own storage.
I think Station 85 would make a good movie.
Yeah,
movie title.
That'd be cool.
And a lot of I think the competitive dynamics are interesting in that area. You see all of it come together. You got a lot of data center build. You have population growth. You've got the hotter summers, and then you have demand from LNG. You have it all coming together to kind of culminate in that Southeast area.
Yep, and definitely you can see why those 2 projects there on the bottom got FID'd so quickly. I would expect it won't take too much longer for Energy Transfer to get their project done as well.
Yeah, nobody wants to go without air conditioning in Florida.
Nope.
I do want to point out, Jack, real quick. Look, there is a long time frame of Station 85 premiums, right? There's a good opportunity for folks out there to identify opportunities. So until this gets all worked out, you can see the capacity or the production hitting capacity or supply hitting capacity there.
So I would look at historical Station 85 prices for the back months there in 2026. Kind of look how they've moved over the past, say, year, and then obviously make a judgment call on whether you think there's any upward movement left. But yeah, it's going to get tight down there.
It is.
All right. Near-term storage and price outlook, right? So, kind of flashing back to more of a macro picture, what do we expect, right? This is our expectation for kind of through winter 25, 26. We've got deficit conditions pretty much alive and well through the end of the summer. But you need that production to really hit that 106 mark to rise above that, to ease those deficit conditions.
Can we, real quick, you keep saying the 106 mark.
Mhm.
Why is it so important?
Because we got there in 23, and then that was too much, right? We have a little, it's been a year and a half, right? We have a little bit, actually, it's been 2 years, but we have a little bit more of a robust demand profile right now. And so, that'll be kind of a test to see like, all right, can this market handle 106? Next test is at 108. The next test is at 110. What I've seen in my kind of history here is that once a market gets used to, say like 100 BCF consumption, it pretty much sticks, and you become ever more dependent on that supply.
Gotcha, thanks.
Yeah. We also did some scenario building here for end of season storage. Again, our base case is 34. That's using a 10-year normal weather. The coldest summer on record in the past 10 years was the summer of 2014. If you were to inject at that same pace from where we stand right now, you'd go back to where we were in March of 24 with about a 670 BCF surplus. For producers, this is worst case scenario stuff. For consumers, obviously, lower prices here, but this also assumes that there's no production declines along that march to 670. Here is the hottest meteorological summer ever in the lower 48 was last summer, at least June through August. And if you were to inject at the pace that we saw last year, you get a deficit of 374 BCF. Now, hot summer, cold summer, my bias is towards a hotter summer because that's what we've seen over the past several years. So I think that the true kind of level, the answer, lies somewhere between this 34 and this minus 374, which is positive for prices.
Positive for prices, and then if we get a cold winter, then we could see it get even more positive for prices. The one thing I want to point out too is when we say summer 24, we're talking the lower 48 hottest meteorological summer on record. It's also regionalized.
Yep.
So is storage. So is production, right? So a lot of this can depend on where it comes in and where the gas goes and things of that nature.
Yeah.
But I know in Colorado, like last year, was pretty nice, but it always surprises me here.
Yeah, don't come visit.
Yeah.
It's going to be hot and miserable this summer.
Hey, should we get to our price outlook?
Yes.
All right. Wait. I asked you to put this in.
Yes.
Look, I'm a firm believer of, hey, trust but verify. So I asked Jack, go back and verify, are we ahead of price calls?
Yeah.
And this is what this shows. And we're about 12 to 15 months ahead of getting to price calls.
Yeah. So, kind of celebrating our successes, we want our clients obviously to have confidence in our outlooks. So little analysis here. Back in January 24, our Cal 25 strip forecast was 40 cents above the forward curve. And we got some questions around that, like, hey, do you really think that we're going to be undersupplied in 2025? And we were like, yes. Do you see the demand train coming down the tracks? It's big. And so, kind of held that view for all of 2024. Market finally came to the realization in about January that, geez, we really are going to be undersupplied. And so the market basically increased its prices to match our forecast. Conversely, we're seeing a little different situation in 26. We really only have kind of 2 report months to do this, but we're looking at oversupply in 2026 for kind of that brief window there before you have another ramp in LNG. And we're 25 cents below the curve in January. Curve for Cal 26 kind of came down to not to meet us, but to kind of say meet us halfway maybe. And
Directionally.
Yeah. So we'll be keeping on monitoring that Cal 26 strip and our performance there. Certainly welcome any questions about that as well.
So should we do a drum roll here?
Yes.
Like you want to reveal Henry Hub price?
You've waited long enough.
All right, let's do it.
All right. So there again is our surplus deficit kind of yield curve there. And then here's our price outlook. So summer 438, about 5 cents above the curve as of Monday. And then we're softer winter 25, 26. And that's because we see that production coming online in Q4 of 25 to really kind of impact that. So if you're looking at the forward curve now, right, this is a pretty attractive price. So this is why we say strike while the iron is hot in the title, because if you're a producer of gas, outside of some, kind of maybe some volatility spikes in a tight market, you might not see this level again. Important there. I think the other important point is a tighter market, which we anticipate, I think we're already pretty tight right now, will bring on more volatility. So price spikes at both Henry and basis points due to pipeline maintenance. Certainly changing, evolving temperature forecasts for the 1 to 15 day will be a big deal for the prop month this summer. And then we didn't even mention hurricanes. So hurricanes in the Gulf are going to be particularly troublesome from a demand perspective should they materialize this year. So something to pay attention to, certainly as it relates to basis there. Storage facilities and new proposed storage facilities are getting a lot of interest there. We'll probably do another report on that coming up in the next couple of months because it is such a popular topic. But I guess kind of signing off right there, you can see our differentials there. You can see our call versus the forward curve. And again, all this is available in that macro S&D report.
Yeah, and clients keep on that. I encourage you to read it every month. We do come out with this. We've been pretty ahead of it. And so we'll have when's the new macro come out, Jack?
This month, I believe it is the 24th.
All right, so see some adjustments there. All right, Jack, let's close this thing out. I do want to ask you, you've been in the industry 20 years, not to date you, 20 years. What are you most excited about to watch in 2025?
I think regional basis developments, right? Sometimes those can be a little bit even more volatile than the hub. So the way infrastructure comes in and kind of clears up these constraints, can be very fun to watch. So we'll be looking at Houston Ship Channel, NGPL Texoak, CG Mainline, and then of course Station 85, as we mentioned before. So
and we have so those price points are all in our Southeast Gulf bundle, right?
Yes, they are all in the reports. That's the monthly S&D reports that are on a regional basis.
We have forecasts just like this on all those price points. Okay.
Yep.
All right, everybody, thanks for joining us. Oops, Jack and I are both hitting the button at the same time. So here's our free content. Please subscribe to it. As I said, the Daily Note came out with Matterhorn shippers. Clients, we're happy to send that over to you if you'd like to know who's on there. Crude, NGLs, and gas. We do believe all commodities are tied together. You got to watch them all to understand gas. So thanks for signing up for those. Here's us again. Reach out. And then just a thank you. Appreciate you joining us. And Jack, always appreciate your perspective.
All right. Thank you, Chris. Thanks, everyone.
All right,